What is wrong with Tesla stock? We'll focus on the highlights with Gary Black, specifically from this interview with Razad, who did a very good job, by the way. Gary is a huge Tesla stock bull. His projected price target for Tesla stock is $550, 6 to 12 months from now. Let's dive in.
As Alexander said, it's the sixth largest market cap company, but it behaves like a little company in terms of its communications. And I'm just not used to that. Usually you get something from a company and I don't really know who to blame. I'm not sure if it's because Elon's, focused on Twitter, or the IR department doesn't have enough staff, or just it's all the above. I'm not sure why. I don't really know what to make of it, but I agree. It's a very frustrating time.
Looks like someone is not happy with a buying opportunity. Now, I do get that not everyone can keep buying. And Tesla could do a lot better when it comes to communications. Martin works at investment relations at Tesla, and there hasn't been anything about production cut rumors or what's going on in China or anything about buybacks or anything that investors are concerned about. And I think Tesla could do a lot better here. But at the same time, Tesla has such good numbers, for example, for return on invested capital, 29%. Insane when you think about it. And one way that they do that is by cutting everything that is absolutely not necessary in all places of Tesla, communications being one thing that is optional, therefore not necessary. Just like wiper blade controls, physical controls in a Tesla.
It's fine not to have PR, but then stop whining about how biased the press is, because the press, people have to understand the way the press works. As competitors who have IR departments will feed stuff to the press will run with it and then, come up with a storyline, because it has to be differentiated. They'll contact Tesla and Tesla say, well, we don't have any comment, or they don't even return the call. And then you're kind of left with this stuff that shows up in these trade rags that is maybe true, maybe false, maybe somewhere in the middle, but nobody's really trying to make it better. So everybody just does what they do. They sell the stock, and look, I'm not that focused on the short-term stock price, but it's very annoying as a manager, knowing full well that the fundamentals are very strong, but there's just no communication. And I just wonder where the board is on this. Most boards would get involved and say, look, Martin, if it's IR, or Elon, if he's the CEO, here's what you need to be doing. But I don't know what the board's doing behind the scenes. Maybe there's a valid reason for. Maybe we're going to hear about a share buyback today or something, and it's quiet. But they're not in their quiet period. The quiet period doesn't start for another week or so. So I'm not sure why we've got no information coming out of the company.
One place where Tesla could greatly benefit, I believe, by having a PR department is to destroy all the fear, uncertainty, and doubt about autopilot and full self-driving. I think it would be good if Tesla fought all of that in full force, because if the public forms a negative opinion, regulators will be less likely to approve full self-driving quickly. They do rely on public sentiment. So if the public sentiment is not good, why delay full self-driving regulatory approval by a year or 2 or 3 or 4? Tesla is a huge company. Tesla could afford easily to have just a few people fighting the FUD in full force.
So since Elon closed his Twitter deal, which in theory doesn't affect Tesla directly, Tesla's down 24%, NASDAQ is flat. That's since October 28th. And if you go back to when he first made his bid, Tesla's down 47. I think NASDAQ's down 17. So I get people saying, well, it's just macro. It's just, the Fed's raising rates, and, if you beta adjust it, it's not, okay? It's like you're deluding yourself. You think it's all beta. Again, down 24 versus 0 in the 6 weeks or so since he closed Twitter, or 5 weeks. That's a big difference. And so, I could see why somebody like Leo, who's the most mild-mannered billionaire I've ever met, he's a nice guy, and for him to be as mad, and I'll use that term, as he was this morning, going, he wrote a tweet just MIA, where's the board, MIA. I was shocked by it, but I was glad, because if anybody can get their attention, it's Leo. He owns 10 million shares, right?
Very selfishly, I wish Elon did not spend any time at Twitter at all, because that takes away attention from Tesla. And long term, I don't know if Elon will pay as much attention to Tesla as he did before, but then at the same time, does he need to pay that much attention to Tesla as he did before? Tesla is no longer on the verge of bankruptcy. Tesla has its future secured pretty well. There's a huge team of very talented people, so maybe it's okay. And even if Elon stepped down tomorrow, I would still own Tesla stock. And really, the number one thing that I wish for is that Twitter was still public. I could buy the stock so cheap. The stock would have tanked completely. And I could be a part of it. I cannot now. So as a Tesla stock investor, I don't like Elon spending any time at Twitter at all, because I can't buy Twitter stock. Please, Elon, take Twitter public again. Now that you are cleaning up the bots, and it will, once the bots are cleaned up, take it public again. If Elon just wanted to clean up Twitter and clean up all the noise, get rid of the bots and just make Twitter better, I think it would be no problem for Tesla at all. But he wants to make this whole new app, X app, which will basically beat every bank at what they are doing, and it will include many other things as well. So this project, it appears to me it is going to be a long project, and it's going to take a lot of time. But still, I believe Elon by far is the number one choice for Tesla.
And look, I don't expect Zach to talk to me, but usually, the CFO will talk to people like Leo who have that many shares. And Zach just comes across as, I don't know, the word is indifferent, but I know he talks to large buy side investors who own the stock, but we don't really get that much from him. And that's different from other companies I invest in, where the CFO is always out there. And look, they drive the communications effort because they realize what's going on. And when the stock is getting decimated the way this one is, usually the CFO or the head of IR are out there saying, look, we need to do the following three things, just to kind of put a Band-Aid on it. And it's not about short-term stock price performance. It's just, you don't want to lose your big shareholders who just give up and say enough. I'm tired of the lack of communication, lack of effort, I guess I would use.
I think at Tesla, it's constant crisis mode by default. So that means you want to make sure that the company is actually performing as well as possible, instead of spending time on talking to investors. Because if you spend that time talking to investors, that means you are taking away time that you could have spent solving the problem. You see, sometimes in my companies, there was one recent example, relatively. There was a problem, and everyone was asking me, what is going on? What is going on? What is going on? And I was not responding because I was in the middle of the crisis, taking care of things. And it was very time sensitive. So if I would have spent any time responding to everyone, then that situation would have gotten worse. But because I was spending all my time on solving the problem, there was no problem at all. It just, for a little bit of time, everyone was like, what is going on? And then after it's solved, I told everyone, and it's like, oh, nothing to worry about. Okay, cool. But if I would have talked to everyone first and told everyone, hey, look, there's a problem. It's time sensitive. I'm working on it. But of course, I'm not working because I'm talking to you. So how can I be working on solving the problem? So there is maybe a little bit of that going on as well. But of course, Tesla is so big right now that it could have people that would be talking to investors or maybe even PR team and everything like that. But Elon thinks that it's not necessary, and it is working so far, I would say, although short term, it's a buying opportunity.
I've been on two public boards. We meet every month, or we do a call every month. And I think, and I've talked to different people at Tesla. I think they have the same cadence. It's once a month. And I think they do more calls than actual in-person meetings. But then you've got different roles that different people play, and I think Larry Ellison used to play a more, this is what we need to do board. And since Larry left, I'm not sure who takes the lead, if you will. When you have a board like this one, it's small and it's a lot of Elon's friends and people
Brother.
he knows. They're beholden to the CEO, but Elon doesn't seem to be that involved with Tesla these days. And that we'll talk about the global CEO rumors. He spends a lot of his time at Twitter, and he's sleeping at the Twitter headquarters. So it's hard to know if he's driving the board cadence or there's somebody else. I can't see it. It's kind of invisible to me.
My understanding would be that I don't think the board really tells Elon anything. If anything, Elon tells the board what to do, and I think that drives the whole agenda. Which, if you trust Elon, that's a good thing, not a bad thing. But there is some frustration with some retail investors. I think they feel they are not represented. And maybe one thing that would help quite a bit is just how someone that retail investors really trust to be appointed as one of directors on the board. It appears to me that Leo, who is an all-in, basically, Tesla stock investor in Tesla, and also a multi-billionaire, doesn't seem that he wants to be on the board of Tesla, but he did suggest Ross Gerber and Gary Black to represent retail shareholders at the board of Tesla, which is interesting. Well, if you want to buy back, Gary Black would definitely be not a bad choice to have.
This company, it's got all the right fundamentals. And look, there's two overhangs in the stock. One is Twitter, one has been China. And we could talk about both of those. In China, you're seeing it now. You're seeing it with, rumors about production cut. You're seeing a temporary promotion that's in place at least through the end of the year. And look, the board should probably be involved in those type discussions, right? You probably get a book. I used to get a book, once a month saying, here's the monthly results. And usually you get, some kind of, here's what we're going to be doing for the rest of the year. And if the volumes are going to be light, and just remember in the third quarter, Elon was talking about epic fourth quarter. Zach gave a guidance, we'll call it, of just under 50% delivery growth for the year. They're nowhere near just under 50%. So, one of the questions I have is, legally, are you supposed to update your guidance if you know it's wrong? And legally, they don't have to, but they should. It's good practice. And I don't expect. I had this discussion with a big investor the other day. When a board knows that their guidance is wrong, or the CFO or the CEO's guidance is wrong, do you update? Some do, but some don't. And the SEC doesn't seem to push them on it. So I don't expect them to update their guidance before, their fourth quarter earnings, which is, probably middle of January, even though Elon's out there saying epic fourth quarter, which is not a guide, but Zach gave very specific guidance. It's just under 50% delivery growth, and we're on track for 50% production growth for the year. And they're not going to make those numbers.
Apparently, no one believes Zach right now at Wall Street. All of the estimates are at about 430,000 deliveries, which is well below 50% year-over-year growth. And Zach's number would put us about at least 40,000 deliveries higher. And if that happens, and if expectations are beat, then last time this happened, last year, when Tesla beat deliveries, which then we found out about in the beginning of this January in 2022, the stock went up something like 10%.
When Zach said something, I actually took it really to the bank, right? I mean, I love Elon, but time is not time, and epic is maybe less epic. But when
well, it could still be epic. We'll see.
And look, part of it is the Chinese economy is kind of a roller coaster. You got, COVID shutdowns, and now the government's saying, we're not going to shut things down. We're going to ease up on the regulations if, somebody has COVID. So part of it is definitely macro driven with China, and you know that. But I also think part of it it's their own doing. That they're not buttoned up in the way they're explaining things that are going on in China. And this whole thing with, the press has a rumored production, not just one, but you had Reuters and Bloomberg both saying it. And then, a day later or 2 days later, you hear about this 6,000 yuan promotion through the end of the year after China, basically Tesla China just, said, no, we're not cutting production, or it's false information, I think they called it.
Yeah.
You would think that somebody in IR would at least get the word out to somebody in the press. They don't have to put out a press release, to just say, here's what's going on, so that people like, our average shareholder knows what is happening, but nobody's doing that. So we're all kind of left trying to figure it out for ourselves. And that's what's causing the uncertainty. If I'm an institutional PM, I get rid of the stock, and then I say, you know what, I'll think about it later. I don't have time. If I've got 50 names in a portfolio, I don't have time to be spending 20% on one name. And that's the way the average Fidelity portfolio manager thinks.
This is wallstreetzen.com. It says that institutional investors own 43% of Tesla stock, 15% is owned by insiders, and 42-ish% of Tesla stock is owned by retail investors. So institutional investors are sort of still staying away from it when compared to other stocks. For example, 57%, more than 57% of Apple is owned by institutions, so there's still a lot of room for growth in terms of institutional investors investing in Tesla stock. If you want to prop up the stock price, maybe investing more in the investment relations department, maybe that would not be that bad of an idea.
And it's got two things. It's got competitive pressures led by BYD, and it's got an economy that's been stop and start as they've shut things down. And now you're seeing it go the other way, where the government is saying, hey, look, we're going to dismantle a lot of this regulatory apparatus for COVID. And we're not going to, for instance, take people who test positive and put them in a separate area. We're not going to do it anymore. We're going to try to work through it, which I think that opens up the Chinese economy, and you get another leg forward, and that'll help next year.
Here is a Piper Sandler report. As you can see, Model Y is here, being sold for a lot of money and a lot of units right here. The more to the right you go, the more expensive a car is, and the vehicles in this color are battery electric vehicles. As you can see, all the competition, even BYD, is not really close to Tesla Model Y. There is one BYD plug-in hybrid, but Tesla Model Y doesn't seem to really have serious competition, not yet, at least. But Model 3 is facing some more serious competition that we have to look into deeper, and I will make another video about this sometime later. But Tesla is focused more on Model Y, not Model 3. So I don't know how serious this actually is. I don't think it's serious at all. Not yet. Later, we do need to pay attention, though, to what BYD is doing. These are 48 reasons why I only own Tesla stock in my stock portfolio. Like and subscribe if you haven't yet, and I'll see you in the next video. Thank you so much for watching.